Now we start off with the National Treasury that has set Thursday the 7th of April 2022 as the date Cabinet Secretary Ukur Yatani will table the budget for the financial year between July 2022 and June 2023 before the Parliament. This means that the budget for the next financial year will be read 2 months earlier than is the tradition and will not be synchronized with the tabling of the budgets of Uganda, Tanzania and Rwanda, as is usually the case. CS Yatani is expected to table a 3.3 trillion shillings budget for the next financial year at a time when there is simmering debate over the 9 trillion shillings debt ceiling and the proposal by the Budget Committee to tame the budget deficit at 400 billion shillings or 3% of the gross domestic product. Now, the national flag carrier Kenya Airways, or known as KQ, has secured an order from the Milimani Commercial Court affording it a sigh of relief in the ongoing court case pitching it against low-cost carrier 748 Air Service Limited over the property registered under LR number 9042/4583. Now, the court order certifies as urgent Kenya Airways' move to challenge 748 Service Limited's storming of the contested premises backed by auctioneers and police officers on the 2nd of March 2022, as indicated in an affidavit dated the 3rd of March 2022 filed by the National Flag Carrier's senior legal counsel, that's Laura Wandera. The order further challenges preceding orders secured on the 16th of February 2022 from the Environment and Land Court, which Kenya Airways argues were based on concealment and non-disclosure of material facts by the auctioneer attached to 748 Air Service Limited. The case is now set for mention on the March 10th. And in other news, Stanbic Bank Kenya has defended its tepid performance in growing non-interest income in the full year ended December 2021, saying that the performance is reflective of a slow start to the year and activity dry-up in the investment banking space. The bank's non-interest income closed 2021 at 10.6 billion shillings, up a marginal 1.9% compared to 2020. Gertrude Washira attended the investor briefing and now unpacks more from the First Banking full-year earnings release this year.
Ever since the Kenya adopted caps on interest rate caps in 2016, commercial banks have been under pressure to bolster their performance in non-interest income streams, such as fees and levies, as a way to diversify their sources of income. In the year ended December 2021, Stanbic posted a measly 1.9% in non-interest income growth, a far cry from the 12.5% growth posted by net interest income. The question is the bank slumping back to a pre-rate comfort zone, which threatens its medium and long-term outlook?
On the NIR side, non-interest revenue side, 2% up on last year, which is fantastic, given that we had a very slow start in 2021 because of lockdowns impacting trade activity, and a bit of IB activity also muted in the first half of the year. And we also continue to extend mobile banking waivers as we did and started when the pandemic started.
The bank's full-year performance benefited significantly from a 53% downgrade of credit impairment charges, implying the lender's quality of loan book is improving over time. The bank's management says the general improvement in the business environment and resumption of loan servicing is helping to prop its performance.
Most of our clients that we had given moratoriums when the COVID pandemic hit have come back to us and told us we are ready to start repaying our loans, we are ready to start working with you, and even under adjusted repayment measures. And that is the outcome that we are seeing in terms of our credit impairments.
The bank's board has proposed a final dividend of 7 shillings and 30 cents per share for the period under review, a 50% payout. This pushes Stanbic's full-year dividends to 9 shillings per share, translating to a dividend of 9.5%. Gertrude Washira, NTV.
Farmers from the Rift Valley region, Kenya's food basket, are decrying the sustained runaway cost of fertilizer after Russia's invasion of Ukraine, one of Kenya's main source of fertilizer inputs. This is due to Russia being the world's largest exporter of nitrogen products or planting fertilizer. The farmers' outcry comes after Better Munya, Cabinet Secretary of Agriculture, on Tuesday told Parliament that the cost of the firm input could rise unless it was subsidized by the farmers or for the farmers. The cost of fertilizer currently stands at an all-time high of 6,000 shillings per 50 kilogram bag, with market players saying that it is poised to breach the 7,000 shillings mark in the near term. The spike in the cost of fertilizer brings concerns of rising inflation as crop prices climb.
Russia and Ukraine is going to affect because those are the major producers of fertilizer in the world. So we expect a lot more of an increase in fertilizer.
Kwa sababu mambo ingine ya kusema bei imeenda juu, sisi hatuwezi kuchua kwa sababu tumezoea kununua mbolea na bei ya chini.
Tunajua kwamba vile vita ambavyo vinaendelea katika Russia na Ukraine ni vita ambavyo vitatuletea madhara. Hizo ni nchi pia ambazo zinatengeza hizi bidhaa, na ni kumaanisha kwamba kwa vile hatutakuwa na uwezo wa kupata bidhaa kutoka nchi kama hizo, ni kusema kwamba kutakuwa na upungufu.
In other news, Gulf African Bank is looking to the education sector as it seeks to grow its loan book in the Sharia case referred to as financing arrangements to customers, which has in the recent past experienced attrition. The Sharia Bank's loan book closed September 2021 at 20.6 billion shillings, down from 22.6 billion shillings in March 2020, posting a decline of 8.8% in the 18 months period ended September 2021. Gulf African Bank is now partnering with a student recruitment agency, Educare, targeting the segment of the market which often has to liquidate its assets to meet education costs for their loved ones. Gulf African Bank closed the third quarter of 2021 with 336 million shillings in net earnings.
Is that most of the students have an issue, most of the parents rather have an issue with liquidity. So the issue is that most of the parents have to go and dig into the investments, sell the investments, maybe liquidate the property to be able to educate the students. Yes, it is expensive to study abroad, but most of the parents tend not to look at the amounts that they're paying, but rather look at the benefits that come along. So what we want basically is the students to go for those benefits.
So what we're looking at is how do we enable our kids go and study abroad, get the best education, and without parents having to liquidate their assets. They may have their houses, they may have other assets. How do we create liquidity for that? So what we're looking at is giving them an equity release where we provide for their kids' education and provide them up to a 20-year repayment period.